Hello, welcome to episode number, what episode number? Episode number 36 of Daily Market Mastery with me, popular investor Christian Rauchenwald. On this, for a change, what do we have? Thursday. Unfortunately, as I've shared earlier this week, we had some internet issues during contract switch, which was quite surprising since it was just like switching the contract that we have from my name to my company's name. But yeah, so internet issues resolved. We're back online. Everything is back working. And so we'll have our episode today instead of on Monday. As always, during those episodes, we're going to take a look at the portfolio and see what changed since, in this case, the last 1.5 weeks. If things start to move in our direction or not. Now, before we jump into that, usual disclaimer, everything that I share in this video / live stream, depending on if you're watching it live right now or as a recording later, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Now, that said, I'll just finish up something on, or actually we'll finish that up as we go in between on my phone. And yeah, so what are we doing? Usually, if you've checked out my portfolio, which you can do by following the link here, I'm using the Elliott Wave principle or Elliott Wave theory to try to determine potential future market movements. And that's how I manage my portfolio. And today we're going to look into how that's going. So we're going to share my screen and you will see first motive wave, which we actually in the beginning don't need, and we can hide that message. And instead, we're going to jump here. And obviously, you can see that this year so far hasn't been going that well, although my 2-year performance, despite this drawdown this year, is still relatively high and probably above average. If we look at the statistics, we had basically 6 losing months so far. I've covered in the last 2 episodes why that happened. So what I missed and how it came that I missed it. And as I shared the last 2 episodes, we're actually now expecting the turnaround in our favor and should still be able to end the year at a decent profit. Now, probably not like last year, since it would require quite a recovery to be able to get from -25 to +45, but I'm confident that we will be able to recover a decent amount of what we lost here. Now, to do that review, we're going to go through our portfolio in the roughly the order of like where we have our biggest positions. So starting with the SPX, where we have a position in an ETF that trades with a slight leverage against the SPF. Yeah, it's also one of the positions that caused our biggest loss. We're not going to focus much on that. What we can see here is, so we're not going to focus much on the losing part that we suffered here because I covered in the last 2 episodes, but we're going to focus on what happened since then. So what we can see here, we hit a new not all-time high, but a new high here. That, according to Elliott Wave Theory, marks the end of Wave 2 in the SPX. And as such, we should now be in Wave 1 that will make up Wave 3. So if we look at the bigger picture here, you can see 1, 2, and now we're in process of Wave 3. Now, Wave 3, I'm just going to move that stuff somewhere in the future because things will take some time. Wave 3, obviously, now where did I put that Wave 5 point? Okay, it's somewhere here, yeah. So Wave 3 obviously has to leave the so-called base channel that we have here to the bottom, which means we will see a new low. And I have to adjust that channel as well because it's not set properly. Obviously, the low point would be this. So as in Wave 3, we would expect, as said, like to have a 1, 2, 3, 4, 5 impulse pattern develop that takes us out of the channel. Doesn't have to go that low. Yeah, I'm not saying that we will see 2,600 for the Wave 3, but we have to go down here in order to then finish Wave 3. Then we would have a Wave 4 that very often, but not always, will touch the top, in this case bottom, since we're looking at a downward pattern, but the bottom or the median of this base channel. And then we would have our Wave 5 develop, and Wave 5 should statistically take us into the area of Wave 4 of the previous impulse wave of a lower degree, which would be potentially here. Now, obviously, Wave 5 will not take us there. So just to clarify a few things, again, it's been also like a while since I now looked at the labeling. So since we have the impulse here and we have here Wave 5, which means we are finished Wave 1 here. So on the biggest scale, we are currently in a Wave 2, which means Wave 2 is a corrective pattern. So To make sense of this, I'm gonna go to the monthly chart. So yeah, like I know that for some of you, this all might be clear. For others who are newer to Elliott Wave Theory, it's not that clear. So we are always in one type of another of an impulse pattern according to Elliott Wave Theory. An impulse pattern starts back here, for example, which is not the oldest impulse pattern because there's a bigger one that finishes wave 5 here. And so above this big one would be another 5 because there's more history to the SPX. And therefore, we would have wave 5, which then becomes wave 1 of an even bigger degree. So because those waves are nested, like you can see here, we have 0, 1, and that 0, 1 consists of 1, 2, 3, 4, 5. And so if we consider the previous history, we would have 1, 2, 3, 4, 5, which then is 0, 1 of an even bigger degree, which means we are in a corrective wave 2 that technically should take us actually down to the point of wave 4 of the previous impulse wave of a lower degree. And the previous impulse wave of a lower degree would be the not visible here 1, 2, 3, 4, 5, which means in the long run, and again, we're talking about a very long time here, we're expecting actually to drop down here. I know it sounds ridiculous to most of you, but time will tell if that's right or not. Just have to wait and see. Now, in the shorter run, we obviously expect the corrective pattern to play out here. And again, it should subdivide in one of the available corrective patterns, which could be an ABC zigzag. And that ABC zigzag should then result and take us to the point where we want to go, which in this case might be here. Now, if we have this ABC zigzag here, then wave A would subdivide into an impulse or a leading diagonal. And you can use the one-page cheat sheet that is also linked in the description down below that simplifies all the wave patterns, or at least like summarizes them in a very good way, to keep track of like how waves subdivide. Yeah. Now, if we circle back to the 2-day chart here for a second, so we can see that we right now have here a 1, 2, 3, 4, 5 leading diagonal, which makes up wave 1. Now we have here a combinative corrective pattern, which makes up wave 2. And now we're supposedly in this wave 3, which would then be 3, 4, 5, and which should then in the end look or be wave A of the ABC corrective pattern. So in the long run, we're expecting to go even further than just below that base channel. Now, the last couple of days, for that, we probably look, let's try 4-hour chart for that. Will take a moment to load. So during the last couple of days, we obviously have seen the market correct a little bit. Zooming the wrong way. Someday I'm going to learn how or in which direction the mouse wheel has to spin in order to zoom in instead of out. Or I'm just going to invert the mouse wheel since I constantly keep doing that the wrong way. Yeah. Sadly, there is no abort button for the loading, so I'll just have to wait for it to load the 8-hour chart that I now get for zooming out, which it probably compiles from like smaller data. So that's why it's taking a moment. Oh, come on. Yeah, that's the annoying part. Like just one wrong spin on the mouse wheel, and now we'll just have to wait a little bit for this to finish, which is a pity. In the meantime, reminder, if you're new to Elliott Wave Theory, you can find really all the resources that I'm using in the description down below, starting with the Elliott Wave Theory book that you can read online for free, the one-page cheat sheet that I'm using, and links to the again, wrong mouse wheel. No, I'm right mouse wheel. It says 4 hours now. Yeah. And links to the softwares that I'm using. So if we look closer, obviously it's not perfect, but that probably will turn out to be another 1, 2, and then probably next week. Again, timings are a little bit harder, but in the near future, considering that we're now on a 4-hour chart, in the near future, we should then see if that is indeed a 1, 2, we should then see a breakout to the bottom. Now, it's possible that this is just wave 1 and that we're here still A, B, C, waiting for wave C, which means we would see a little bit more recovery, and then we would see the breakdown. But overall, let's actually go back to the 2-day chart. So overall, it looks very promising that our pattern here is finally correct, and that we're now going to see our positions in the SPXU move in our favor to slowly reduce the current minus 33% of that position. Now I know that position looks like what the fuck, there is minus 3%, but keep in mind that over the last 1.5 years I've took a lot of profit from those SPXU positions and just re-entered them at certain points. So technically the overall SPXU position long term is actually profitable. Anyway, so in the NDX, if we move on to that, so because the next big position that we have would be in the SQQQ, which is an investment that is inverse with slight leverage to the NDX. We have a similar situation where we are now expecting, so that we have our 1, 2, 3, 4, 5 wave 1 completed, and now another combinative corrective pattern here finished with WXY, and we would now expect that we again have then here our 1, 2, 3, 4, 5 develop on the way down as a wave 3. Again, the requirement for that third wave is that we go below that base channel here, so that we go below the low that we had in, what is it here, October 2022. And obviously that will not happen overnight, but it will again gradually play out as a 1, 2, 3, 4, 5, and then that wave 3 will basically take us somewhere outside of that base channel, and then we would wait for a corrective wave 4 that again touches the top or the median of that base channel, and then we would have a wave 5, which then again, just like in the SPX, would make up wave A. Then we would have a corrective wave B upwards and a wave C downward, but there will be no new all-time high according to Elliott Wave Theory. Now we will see how it plays out, but that's what Elliott Wave Theory suggests right now, yeah? And that's also the reason why we're holding on. Our next big position would be GameStop. Obviously, I've made a separate episode about GameStop in the past that covers why Elliott Wave Theory might not apply as much here as it does in other stocks anymore. But looking at it, it pretty much looks like this. If we label it 1, 2, 3, 4, and we would now be in the beginning of wave 5. If we look closer, that would indicate that here's the end of our wave 4, and that here now we have the potential beginning. So yeah, like, or not the potential beginning, but here now we have wave 5 in development. Yeah, now wave 4 could theoretically be unfinished and still move a little bit further. I actually need to go out a little bit for a minute here. Monthly chart. So we have, where does that line come from? That line comes from, so let's get, oh, okay, that was like a retracement. Yeah, technically, yeah, like, so it's likely that we finished wave 4 here, but it's not guaranteed. If that's already the end of wave 4, we would basically see wave 5 slowly develop here, which we might see better maybe on a daily chart instead of a 2-day chart, where this could potentially be 1, 2, 3, 4, 5. So 1, 2, and if that's 3 and 4, then that would turn that into a leading diagonal, which would mean that we actually would expect a little bit higher here to finish that pattern, then a corrective pattern, and then go up. So yeah, while Elliott Wave Theory might not apply as much in GameStop anymore than it did previously, I still expect the stock to increase long-term simply because of the fundamentals behind the company in terms of being debt-free, having a lot of cash, having a lot of inventory, and exploring or branching into new markets to generate additional revenue streams. Yeah. So that's why we'll keep holding the GameStop position, although I might eventually close it in my eToro account, to be honest, and also move it to ComputerShare, the transfer agent of GameStop, to actually have my shares registered on the company's books instead of just in my eToro account. Yeah, so moving on, the next thing we have is the SRTI, which is basically our investment against the Russell 2000. Yeah, where we are looking at a similar situation. So we have here the all-time high followed by wave 1, wave 2 that finished here, and now wait, ABC. So now there's a mess here. Where's the B coming from? Okay, so wave 1, then we have a flat corrective pattern that builds a new low for wave 2 here. Then we finish the first wave 1 of a lower degree here with an ABC, finishing wave 2 here, which means we're now in the third wave of a third wave, which means we would expect strong downward movement relatively soon. If we look here, we have another 1, 2, 3, 4, 5. So that's wave 1, or wave 1 finishing here. but potentially here with another flat corrective pattern A, B, C, and where we have the turnaround point precisely at the 60, or not precisely, but around the 61.8 retracement. Short reminder, very often the corrective wave 2 will turn around at 38.2 or 61.8 retracement or in that area, with very often, but not always, also happens to be the endpoint of wave 4, in this case not. But yeah, so that's what's very often happening, which means we would expect here to play this out again as a 1, 2, 3, 4, 5 that takes us further downward. So in between, there might be slight upward movement, but we shouldn't go higher, or we shouldn't even get into the area of this point anymore. And overall, we expect it to go down. Interesting is also if you use like old-fashioned things like support and resistance lines or levels, then we can clearly see that here at the current level where the price bounced again, there is a huge resistance over the last 6 months. And probably if we zoom out further, so let's jump to a monthly chart for a change. There we don't see it, so there was no big resistance here on the way up, but on the way down we see that it basically here that area serves as area of resistance now. So zooming in on the 2-day chart, it basically comes down to 1, 2, 3, 4, 5, A, B, C, or that could be 1, 2, 3, 4. We see a little bit more, so that wave A is actually bigger. But yeah, overall, still same thing. We're expecting it to go further down, and so far the development of the wave patterns seems to be in our favor. Next position would be the SDAO, so our investment against the DGI, where we also have the same situation, although we haven't labeled it in as many details, where we overall, since the all-time high, have a wave 1 and ABC corrective pattern, and are now looking at a potential wave 2 here. So no, wave 2 finished here, sorry, with the ABC corrective pattern. So we're looking at wave 3 and how it subdivides. It's going to be interesting to see how that plays out. This here could potentially be 1, 2, 3, 4, but that actually would get invalidated here. So it's going to be hard to figure out how that subdivides. It is, however, possible that wave 2 did not finish here, so that this is only the first corrective pattern in a combinative corrective pattern. We'll need a little bit more time to see that. Overall, it doesn't change the labeling where we expect things to go down in our favor. Then after that, next investment we have is Black Knight Inc. It's something where we have basically overview labeling that suggests that we have a 1, 2 and are now in wave 3. We entered somewhere around here. Our risk-reward ratio is insane because our stop loss is at 52, and we expect if that's the end of wave 2, then it would be 1, 2 of wave 3, which means we would now expect to slowly have wave 3 developed, and wave 4 and wave 5 should actually take us out of that channel, which would mean a new all-time high for Black Knight Inc. Although obviously if we look at the time frames, not in a week or in a month, but over the next couple of years. And yeah, so far we had a small loss currently in the position, but overall, the fact that on the way down we didn't break the 52 line is very, very inspiring or supportive. However, we also have to consider that basically, we have to keep an eye on it depending on how things develop, especially if we get into this area here to see if there's a downturn that might turn this into a downwards trend channel. But overall, we're gonna hold on because either we are wrong and our stop loss at 52 will limit our loss to make it like not really impact the portfolio, or we are right and that position will soar over time and actually make us a lot of money. Next position we have in terms of size would be Domo. In Domo and our Domo position, I'm actually gonna open them up on the where is that here? So in Domo, we are currently up 4.8%. There we are looking at a smaller scale even, although on the bigger scale, we also expect that this is 1, 2, and that we're now in wave 3 on the way up. And what we're looking at right now is our expectation that we say, okay, this might be 1, 2, and we're in wave 3 off a wave 3, where potentially that we have to adjust. That would be our base channel. So if this here is on the smallest degree, 1, 2, and we have wave 3 in progress, then that might be 1, 2, so that wave will actually go longer, so take more time, blah, blah, blah. But we would expect to get out of this base channel on the small degree and then retrace back and then eventually break out of this base channel on the bigger degree and then eventually break out of the even bigger channel that we cannot see right now that's up here in over the next couple of years. Yeah, so yeah, like let's try to adjust that again. Yeah, so like this, yeah. So yeah, nothing to complain about here. So far, our labeling looks promising. In Domo, we already took some profits because we were lucky we entered here. And then during one of the episodes, I actually noticed that this subdivides nicely into 1, 2, 3, 4, 5. And so we took some profits up here and then re-entered a little bit early here. So around the area of our initial investment. But as we can see, because I thought this would be ABC already, which turned out to be not the case. And as we can see now, however, our position is again in profit. So it looks like I was right here. Yeah, we'll need another couple more months to see just how right. Either that position will turn into a huge profit already in that time, or it will also hit our very small stop loss here. So risk reward ratio is again insane. Yeah, moving on to NEO. NEO currently is up 20% for us. So if we move on to NEO here, yeah, keep complaining. That's one of our in quotes, yeah, like, yeah, not gamble positions, but I have a rough time labeling this corrective pattern. However, I do know if this is indeed correct. So if we have 1, 2, 3, and this is wave 4, that we cannot go into the error area of 565. So it simply would violate the rules of an impulse pattern, and therefore, our risk is limited to 565, with from the price we entered is reasonably low, whereas our reward would be, if we're right, a fifth wave has to recover at least 70% of what it lost during wave 4. But usually would actually get a new all-time high. And in this case, it means, again, insane risk-reward ratio. Although with NEO, while the position right now is at a 20% profit, it could go both ways. Yeah, so we also have to keep an eye and maybe during the next couple of weeks take a profit here and consider then keeping an eye on it and re-entering it once we have a confirmed fifth wave. Yeah, which would actually only be the case once we have a breakout from this channel here. So yeah, maybe we'll take the profits in NEO during the next couple of weeks and be happy about what we made so far and then evaluate again in the future. Goldman Sachs, next one, right now at a 1.89 loss. We were already in a profit here, and apparently now the position moved a little bit against us. Yeah, overall on the biggest scale, we also have the same thing, that we actually think that we are on a big degree on 1, 2, and now in wave 3, where this would be wave 1, that potentially wave 2, this here wave 3, and this here a finished wave 4, where we right now would be in wave 5, which would then finish this wave 3 of this degree. Yeah, where that could be only part of wave 1 that makes up. No, that could be, if it turns into an ending diagonal, it could be wave 1, 2, 3, 4, with now wave 5 coming, in which case we wouldn't reach the top here, but would actually end at the median. We'll have to keep an eye on it. Our stop loss here is also very, very close. So again, our risk reward ratio is great, especially if we consider the overall outlook that we expect this wave 1, 2, no, not this wave 2, but actually expect, as you can see, a new all-time high down the road. So yeah, we'll have to keep an eye on it. But overall, again, risk reward ratio hugely in our favor. And yeah, we'll see in the next couple of weeks how things go. The next position on the docket would then be Ford, with currently 16% in our favor. And if we jump to Ford, which we have here, yeah, we can see that actually Ford is one of the examples of how Elliott Wave Theory plays out when you're right. We entered the position around wave D, and to be fair, I entered that a little bit early, because back then in the episode about Ford that you can find when you check the history of the episodes, I already mentioned, okay, this likely is an contracting triangle, which means once we hit wave E, where very often wave A or point A, C, and E are on a almost horizontal line, we'll have the breakout to the top. And as we can see, it looks like that's the case with 1, 2, 3, 4, 5, which means we would right now, the next couple of days, expect a little bit of a drawdown. So like a wave 2. So this would be 1, 2, 3, 4, 5. But on the biggest degree, we actually expect a new all-time high over time. And so, yeah, it's nice to watch this play out exactly like predicted so far. We'll keep an eye on it, and maybe once we have a confirmed first wave finished here, maybe we'll take some profits and re-enter lower, or we just use the corrections that might follow if the wave patterns, or as long as the patterns check out, to increase our position further for increased profits as we potentially go up here. And moving on, Disney currently, yeah, not looking that good. I think we already were at a profit in the last episode. Yeah, we'll have to see. So I think Disney, we were at a profit, and now we have had this here happen. But yeah, overall, the pattern's still valid. You see on the biggest degree, we also think that it's 1, 2, 3, 4, and now we're in wave 5. Now, obviously, it could be, sorry, I'm going to zoom out again for a second. So on the monthly chart, wave 4 here checks out because it would be the 38.2 retracement, and it also aligns with the point of wave 4 of the previous impulse of a lower degree. Well, those are not rules set in stone, but guidelines that very often hit the mark. So it's unlikely but not impossible that actually that labeling turns invalid. So unlikely because there are additional rules that are confirmed. Not impossible because, yeah, it could theoretically go lower. Our risk-reward ratio here is, however, indeed, again, great because our stop loss is at 84, should be. I'm going to check real quick where our stop loss is for this here. So our stop loss, sorry, is at 79, a little bit below that point here. But other than that, I might actually set it to 78, to be fair, because it's not going to turn around exactly on that point, but somewhere in that area. And our potential profit is obviously recovering 70% at least from wave 4 loss, but more likely hitting the top of the channel. So if we switch to the 2-day chart here, yeah, if we assume wave 4 finished here, then this would be 1, 2, 3, 4, 5, and then that would be A, B, C, which means this here should actually be beginning of wave 3 with another 1, 2, 3, 4, 5, which is then wave 1, 2, 3, 4, 5, and so on. So yeah, basically the next, since we have a 2-day chart here, the next 2 months till September will show what is what. We'll either lose that position because it turns out that the labeling was wrong with wave 4 being here, or we will see that we reached that area here and will therefore have like additional confirmation that likely it's going to play out the way we thought it would. And yeah, then last thing is Icon Enterprise is another example of Elliott Wave Theory done right, in quotes. Yeah, you can check out my 2 episodes I made about it. In the first one, we had a wrong data source that you cannot see right now here because so all that data here is currently not loading. But basically in the first episode, we had a wrong wave 4 candle, so a false data that showed that at $10. But then in the second episode, we actually corrected that and entered our position here because this here looks very nicely like an ABC corrective pattern where we have now finished our corrective wave 2 at the top of the base channel on the bigger degree, which would indicate that now we have here also wave 3 in progress. So if we zoom in on a 2-day chart, yeah, that likely already, or actually let's go on 4 hours, might take a moment. That potentially could be 1, 2, 3, 4, 5, or 1, 2, 3, 4, 5. In which case we would now have wave 1, and this would turn into A, B, C. If that's wave 4, then that's likely already finished, which means it would be 1, 2, and now we again have a 1, 2, 3, 4, 5 upward. If yeah, it's however also possible that this is not ABC but ABC, in which case we would go down to around 24 before we further go up. Either way, yeah, also looking very, very promising. So overall, if we look at the portfolio, obviously it doesn't look that great so far this year, and especially because very often we had a couple of months where we were actually profitable in the middle of the year and then lost during the last 1 or 2 weeks of 1 week or last 10 days of the month. Yeah, and it's been infuriating. I've covered it in the last 2 episodes about why it happened, why I didn't hedge or stop certain positions, because they still at the time looked like the patterns are correct, just to then get invalidated really quick and in drastic moves. And yeah, like, however, using my own assessment and application of Elliott Wave Theory, my results so far over the last couple of years using Elliott Wave Theory in bull markets as well as bear markets, and also in combination with resources from Elliott Wave International. So pretty much the guys that wrote co-wrote the book about Elliott Wave principle. I'm confident that we'll have the next 6 months, not saying that there will not be a losing month in the next 6 months, but that we will see the downward momentum start, which means we should have a lot more profitable months, and the losing months should be relatively small in comparison. Obviously, only time will tell what will happen, but so far I'm relatively fine now, or I'm comfortable with holding the position and not making any huge adjustments, other than mentioned, considering taking some profits in certain positions that we looked at. Now, that said, usually we have our portfolio review on Monday. Now, today it's already Thursday, which means there's only going to be 2 trading days before we have the next episode, which doesn't make sense because we look mostly on 2-day candles. So we would get 1 additional candle on the chart that doesn't really change much. Yeah. So we're probably going to next week make a change of topic and look on Monday at probably Bitcoin and maybe Ethereum, so in the crypto space, to apply Elliott Wave Theory there, and I'm going to share my insights in what I think will happen to those in the near future based on Elliott Wave Theory. And yeah, with that, we already are at the 30-minute mark, so I hope you're able to take something away. As usual, if you have any questions, if you disagree with my assessment, if you agree, whatever your opinion is, you can share it in the comments below. But you can also use the link in the description and in the chat, pinned in the chat, to go to my portfolio. And if you have an eToro account, leave a comment on one of my posts there, or if you don't have one, create your free eToro account and then leave a comment there. And yeah, so that's it. Thanks for tuning in. Thanks for those of you who copy my portfolio and are still confident in my ability to manage it. So yeah, see you all on Monday.